All right, welcome everybody. We are going to go over today's setup, what I saw, why I decided to go long versus short, why my stops were so tight, the structure, everything. We're going to go over the loss and why we took the loss, and we're going to go over why we went back in as well. All right. All right. So, the first thing I saw this morning when I woke up was this right here. I saw that the market left this gap down here. So I stayed paying attention to the gap because eventually, whenever the market wants to do it, it'll come down and it'll fill this gap right here. So even though the market was here and it was bullish and it already did a pullback here and it started going up, I was still keeping this in mind. So I didn't want us to get trapped in longs up here while the market may have had an intention to come back down here. Get it? So I kept today's risk tight and light. And we're going to go over that right now. So at this time, you see, this is the replay right now. So you don't see any of this yet, but I'll play it out as we go. But I'll show you guys what I'm looking at and why breaks of structure are so important and why understanding market structure is even more important. It's everything. It's why I always force that on you guys. Like, yo, get used to the market structure, study the market structure, understand breaks of structure, and it will guide you into the right direction and into profits. So when I woke up this morning, I was staring at the chart just like this, and explained to you the gap down here. I went ahead and just took a ray, placed it up here, because I told myself, if the market decides to break up above here, then we're going to go for longs, no matter what, right? We're going to go for longs because why? What happens when the market breaks structure in your favor, Tommy?
To the upside?
To the upside. What do you look for?
Uh, uh, I'm looking for it to make a higher low.
Correct, which would be our entry. So that means you're looking for longs.
Yep.
That's all we do. We look for the breaks of structure. The breaks of structure tell us the market's intentions and then allow us to start looking for setups within the market structure that it's given us. Makes sense? Makes perfect sense.
Yep.
Right? So let's play this out for a bit. Over here was the 9:30 candle. Let's see if it plays out with enough speed. Any minute now. Oh, played out a little too far. See, that's the internet tripping again. That's the internet tripping again. All right, boom, here we go. So we got our break of structure to the upside, right? This is the tricky part. Do we place the point A on the fib here or point A on the fib here? What do you guys think? Either this one with the bearish candle or this one right here.
Well, the second one, it tested structure, so you go off that one for now.
This one right here.
Yeah, that tested structure.
That's a good one. That's a good one. Another way to find an answer to get some more data, what time frame do you guys think I would go to?
Oh, 4 hour. Four
No,
hour
that's
data.
if we go to the 4 hour,
1 to 4 hours.
we have less data. So you see what I'm saying? We have less data.
Oh, so you need
Like
more
it
data. So
doesn't,
like,
it's not that it's wrong. because when you're looking at the 4 hour, you can get the whole picture, right? You can
Right.
use this bottom one
To the top.
and right there to the top, right? And you can mark this off. Let's say we like that one. Let's say we like that one. It's not wrong. You get what I'm saying? It's capturing the full retracement of the move on the higher time frame, which is the most important thing to catch. So there's nothing wrong with that. But for us to get data in the price action chart, we want to go looking down to the lower time frames. So the 1 hour gave us this wick. So you as a trader, you want to find out what's in this wick. Just go to the 15-minute. Boom, and you find that right there. You see a nice order block here. That's looking real nice and pretty, right? And you see the wick, the second wick. This right here, this second wick represents the low that Carlos was talking about that he liked, right? So you as a trader, you have to determine what's best. Do I use this stop loss here, or do I move 0.8 up, since this is the new low to the new leg that went up? This is how getting familiar with your fib and dancing around with it and moving it around and using plays on it, it gets you familiar with everything on the chart, with the market structure. Because now you're starting to get better at being super detailed with where you want to place your fibs. Placing your fibs is secondary to market structure. So paying attention to market structure would show you things like this. You got a break of structure here, right? And you got a break of structure here. And we can even use this as the break of structure, because we already know this broke structure. So just to not have too many lines, this is a break of structure. Can you guys see that clearly?
Yeah.
All right. Let me move this fib up a little bit. Right, so we're looking at this. Now the market is open. 9:30 open came and it just blasted up, breaking structures to the upside. So we're bullish, no matter what. Even if this gap is down here, we already know that it's down there. We're gonna pay attention to that. Yeah, keep that in mind and respect it. The way I respected it today was giving it a type stop loss on the analysis versus usually having a stop loss all the way down here. Like this would have been the entry right here, right? Because that's the 618. You guys see that, right?
Mm-hmm.
And this would have normally been the stop loss. 400 to 500 ticks on the stop loss is normal in the setups that I send you guys. You guys take those all the time. But today I was like, I don't want a 400 ticks a stop loss. I'm gonna make it 200. Oh, sorry, wrong one. I'm gonna make it 200 just in case the market does want to come down. We already have a tight stop loss, and we take a very light loss, and we can reset and wait for the market to set up down here, and then we go long from here after it fills the gap. You get my thinking?
Okay, yeah.
That's how you have to think. You have to like be aware of your surroundings at all times. Keep an entire overview of the market in front of you at all times, and then you start going in and starting to look for the details that you want. Right? So we found an entry that we liked. I believe the entry was, let me go look it up right here. The entry was 29,939, right? 29,939. Flat. That was the entry. And so this is 200 ticks. 29,889 was the stop loss. Now you're gonna find something interesting here because there was two plays going on at the same time. The 4-hour play and the 1-hour play. The 1 hour, 15-minute chart plays. You're gonna see why we got taken out right now and then why we decided to get back in. Right? So we're gonna let it play out a little bit. You see how it took us out right there? What do you guys see on the chart that it ticked?
The 786.
It did tick the 786.
And the 618 on the 4-hour.
This is the 4-hour 618. The main play of the day. You get what I'm saying?
Mm-hmm.
The market will do this. The market will play around like that. It came here to run this 30-minute stop loss and the 15-minute stop loss. We can stay on the 15-minute. It came here to run this again. Even though this 15-minute order block got ran through, if you go to the 30-minute, you'll see it didn't get run. It wasn't ran yet. So the market came and ran the complete order block from wick to wick. These are things you want to pay attention to. Now, all I had to do was turn this into a 300 tick SL, and we would have never took the L. But remember what I was paying attention to.
The gap.
This.
Yeah.
Just in case during New York session, it wanted to come fill the gap.
Mm-hmm.
So that's why that decision was made. It's a perfectly fine decision as far as risk is concerned. Boom. Do we have two of these here? All right, we got two. Interesting. All right, let's get to go. So it came down, it tapped our SL, and I told everybody we're waiting for price confirmation in order to jump back in. First, I want to see it start going bullish. So what time frame do you guys think I went to go look at in order to see price action start to turn bullish? $15-minute, 5-minute.
15-minute. But you went to the 15-minute, see more details?
I went down to the 15-minute to come see more details. I didn't see much there, so I went down to the 5-minute. Look what I see here. A nice bullish candle came and tapped this 618 down here, and it's already running up. Once I saw this, if it plays, play for us, baby. See how glitchy that internet is? No, it doesn't want to. Let's go to the 15-minute. Oh, well, it played out. It played out in the 15-minute. But let me go back to this right here. Damn it. See how I get stuck? Once I saw that pop off, it was actually this candle right here where I started to get in at. All I did was go down here. The 5-minute broke back into profit and pulled back. And once it pulled back into the entry, that's when I got back in. And it just took off from there. See that?
Mm-hmm.
Really nice and easy. All we were doing was just waiting. Yeah, we had to wait through all these 5-minute candles, but it was worth the wait. It was definitely worth the wait. We didn't have to do much after that except figure out where you wanted to take profit which every single level was given inside the setup and the signal. TP1, TP2, TP3. We did a complete 1 to 3 before the market liquidated all our positions. And right now, it's probably running to a 1 to 4, which is this one over here. Yep, it just hit 1 to 4. Final TP hit. So if anybody had a large enough account, you could have held the swing overnight and just tapped you would have tapped the final TP, which I got to update that in the chat. But you can see this here. A lot of people got out at TP1, which was right here. $200 ticks right here, TP1. Right there where the candle's at. A lot of people took profit there. You made your loss back right there. So you had a break even there unless you went in heavier with the contracts on the second entry, which is another thing you can do if you know what you're doing, which is what I did. I had 4 contracts on it when I first took the L. And then when I jumped back in, I slapped 8 contracts on that push back up.
I had 1 contract on it. I slapped 4 contracts getting back in.
Because you know what you're doing.
Yeah.
And you made way more than you lost.
Yeah.
You know? So a lot of people, once this started popping off, they took their profit there. Let's see if it'll run smoothly for us right now. It'll probably do it over here. And then they saw this. Whoever was holding was probably sweating. But remember, I was guiding you through the whole process. When it did do that, what was it? Right here. I told you guys, so far it's working out as expected, but we need bullish candle closures. If you're in, continue to hold and your patience may pay off. That's this right here. Right? And then it went bullish right here at 12.25. Right there on the way. And then we hit back into TP1. 300 ticks running. And then we got into the continuation pattern, which was forming for those who were holding, right? That's this right here. You'll see this play out right here. This was a sweet play, but it did take experience in order to hold this, because you got all of this that you're holding through. But once you see that, you know you're sweet. You're golden. You're getting paid. You're making the money. Because at that point, the play is running 368 and TP2 is right here where the blue line ends, which it ended up going to anyways. And it kept running, gave us a pullback, back to bullish, and it just kept going and going and going. This thing was a beautiful play, guys. And all you had to do was just stick to market structure. What is this thing? What is price action doing as it's going up? What's the main thing that you have to look for in order to confirm continuation in your favor? What do you guys think that is?
Higher highs and higher lows.
Higher highs and higher lows. And
Break of structures.
breaks of structures. You got breaks of structure there. You got breaks of structure here. Oh, sorry. And then up here, you're just waiting for break of structure if you're holding to go upward, which the TP, the final TP is up there. Right? That's all we're doing here, guys. In order to hold long positions for longs, you need breaks of structures in your favor. You need higher highs, higher lows, higher highs, higher lows, and higher highs. This is eventually going to get up there. Right there. The market is actually live right now. Let me X this out. Yeah, the market is actually live right now. And this is literally TP4. Oh, wrong one. Oh, sorry, TP3. Right here, right there. And this is what we did this morning. We took a 200 tick L, and then we had an 800 tick win. That's the final TP. But most people, I know I did. I got out around 625 ticks, 600 ticks, something like that. And it was beautiful. It was smooth. Even with the L, I'm pretty sure you guys were calm in the chat. I can guarantee nobody was bothered by a 200 tick L, especially when we got back in. Because everybody that did take an L that I saw got back in and they made all their money back plus profit. And it was a great play. And all I was doing the whole time while we were in the chat, because this took all day. Usually we're done by 11 and we're done. We're gone. But this took all day today. New York session has been slow lately, and it's been faster in the nighttime sessions, like London and shit. But this was beautiful, man. Like we didn't have to do much. I didn't have to do much except wait for breaks of structure, retests of structure, breaks of structure, retests of structure, and take profits along the way. All I was doing was taking partials every time it would jump. Boom. Like it would break structure. It would show me that it was exhausting, and I would just take profit. I'll remove a contract, wait for it to continue, go up, break structure, remove the rest of my trade. It was a beautiful play. It was smooth. Like, yeah, we had a lot of wiki action right here that, like if you're not experienced, that will force you to make a decision that you don't need to be making when it never broke structure back to the downside. All it did was pull back. And this right here is most likely a 618. Let's check. Almost 618. It stayed bouncing between the 38.2 and the 50, which is still perfectly fine. Still perfectly fine. We had exhaustion wicks to the downside, which means the bulls are still in play and the sellers are exhausted. And we just continued to play up. That's all we had to do. Move our stop loss to break even or into profit after you get breaks of structure. Use this as a defense line and just let the profits print. And that's all we had to do. Using this strategy right here keeps everything simple and mapped out. And as it's playing out, you map it out. You know what I mean? And you keep it nice and easy. You don't go looking for complications when you're trading. The best thing you could do is keep everything nice and simple and easy. That way your trading is smooth. That way your psychological is smooth. And once you're in control of your psychology, you're literally in control of your emotions inside while the play is active. Because if you're not in control of your psychology, man, you're screwed. Look at that. This thing hit TP3. This entire play is a 1 to 4. We went up on a Tuesday. What more do you want from that? And it's still running. And that's all I wanted to review today. I wanted to review the play today and just give a breakdown of what I saw, why I decided to go long anyways, even with the risk of the market coming back with the gap. I prepared for that. and allowed the market to tell me when to get back in because the analysis was still strong. Once I saw this bullish candle go up there with that wick like that and close, and then this one started pushing, I just went right back in, upping my contract size. But that's due to experience. I don't always recommend people do that unless you know what you're doing. Once you know what you're doing and you understand the behaviors of the market that you're in, you can trade at an advanced level like that. If not, keep your contracts the same at all times until you gain experience, and then your profits will start soaring. That's not even a guarantee. That's just what it is. That's how it goes in trading. Let me see this over here. This was the entire play right here. Take profit 1, 2, and 3. All of them hit. Now that's a great way to start a week, if I do say so myself.
Mm-hmm.
It was
Most
beautiful.
definitely.
It was great. Even with the L, because people think that you take L's, oh man, you're trash. What are you talking about?
It's part of the game.
Losses are part of the game.
Yep.
If you're not ready to take losses, keep your job. Keep your job. Stay there, collect your paycheck, and there's nothing wrong with a job. You should have a job while you're day trading and learning how to day trade. I recommend that to everybody. Like, as soon as I start teaching certain people how to trade, they're like, oh man, I'm gonna leave my job next month. I'm like, no, you're not.
I'm at work right now. I'm at work right now.
You are not about to leave your job. No, sir. No, ma'am. Keep that income coming in, because that's also going to help your psychology stay balanced.
Mm-hmm.
Imagine you're day trading and you're on a losing streak for some reason. Even though the chat is winning, for some reason, whatever it is that you're doing is continually making you take losses. If you didn't have that extra check coming in, you'd be losing your mind. So I always recommend people keep your job until you get consistent in this, until you learn the ropes and you find your flow inside the charts. And that's it right now for as far as me explaining this right here. You guys got any questions or any charts you want to review?
Are you planning out? Well, I don't see anything because I see what is just breaking that last high.
It's just breaking. It's just going up, man. I'm not gonna look for a setup on NQ right now. I'm gonna let it breathe during Tokyo and London and do its thing, Yeah,
because I got all my stuff charted, so I'm not really worried. I'll look at it in the morning.
Yeah, but that's what I'm gonna do. I'm gonna look at it in the morning and see what's printed, and then go from there. Because we don't know. Maybe during London it does want to fall down, and which I don't see that happening. Like falling all the way down and filling this gap after making all of this higher time frame market structure. Like, let's look at the 4-hour. I don't see that happening. If anything, what's going to happen is this. It's going to come test this order block. Maybe. Yeah.
Yeah, I see that. Yeah, you're right.
Maybe that'll happen. Let's see here. Yeah, maybe that'll happen here.
A nice little play right there.
That'd be a nice little play right there. I'm going to tell you that right now. It's got my antennas up.
Yeah, it does too. Cause
that might happen. So I'm just gonna mark it. And just be aware of it for tomorrow. Oh, let me put this back here. Yeah, let me put those right back there. I gotta send that in the chat for whoever held that. Whoever held that is a beast. I got out of about 600 ticks.
Once I made 1 to 3. I did 1 to 3. I said 1 to 2 in the chat because I counted for the loss too. But I did a 1 to 3 on the second one, and I was happy. I'm like, I'm good. That's good enough for me. Let me get up.
That's a great start to the week. We just came back from Memorial Day weekend. The market paid us. And all we had to do was wait for the setup to come to us and then manage it properly through the loss.
Yeah.
Through the loss. That's all we had to do.
And I think the most beautiful thing about today was, even though we took the loss, it didn't feel like anything. I
It
was
didn't
like,
feel it really didn't. It didn't feel
and
like we were just like, oh, okay. So we took the L as we expected. Now let's wait for price action to tell us what to do. It's telling us what to go back in. We went back in. We stuck to our guns. We stuck to our analysis, and we saw the entire play through. And there was nothing else to do after that. You take
real calm,
profits,
like
real calm.
real calm. Yep.
Yeah, and that's excellent trading right there. You're not stressing it. Even through, once you get to the level of once you're taking L's and you don't stress it, you've made it. And you keep that consistent, you've made it as a trader. It's only a matter of time before you get rich. It all depends on your account size. It's all about your account balance and your psychological balance, of course. You got to have those two in check. You have to, guys. Like, you see what I'm doing on these lower time frames here? Where we're just looking at these breaks of structure. I do this on higher time frames, dailies, 4 hours, weeklies, for swings. So just imagine if you're on a trade and this trade produced 800 ticks, right?
Mm.
What if you took a swing one time and for NASDAQ, you swung 10,000 ticks or pips, depending in the market, whether CFDs or futures?
It's insane.
It is. It is insane. Like once I started swing trading and I'm managing 3,000-4,000 pip trades, I was just like, oh shit. This is where the big boys hang. It's an entirely different animal. It's an entirely different animal. It's a lot slower, but you make more in the long run. Because we've taken, I don't know how many trades on this. All we've been doing is going long all the way up here. All of this. But imagine we would have gotten in right here. Imagine this order block was our entry and we never closed. Right? Let's say this order block was our entry, which is probably like a 618-ish, somewhere around there. Yeah, 618 right here. Bing, tapped into the order block and left it. Let's count how many ticks that is. To the top. Almost 4,000 ticks.
Woo. Oh man, that did damage even with one contract.
Like, is that even reading right? Hold on. It looks like it should be more. Yeah, almost 4,000 ticks. On one contract, you're in the tens of thousands. You're in the tens of thousands.
Well, my only problem is they closed me out at four.
Yeah,
A
that's the
little bit
thing.
past four, like
You need
4:15.
you need the account balance that's gonna let you hold margin like that. So like let's calculate that for shits and giggles. Let's see what that was. It was right here. This is the play, right? Let's say, oh, this is the micro. All right, we'll stay on the micro. Let's go with 5 cons. I don't even think it's going to be that, like in the tens of thousands, but I could be wrong. Oh, I was actually right. 10,000. And for those 5 contracts, you risk because you'd put your stop loss below the wick, obviously, right? You're looking at 1,255 on risk. And if you held all of the everything from down here to now, you would have taken profit at 10,000. Now
That
you're
is
holding
stupid.
all of this, but that's a $10,000 play right there. On a damn, I wonder what it's like on a micro. I'm sorry, not a micro, a mini. Let me get this out of the way. Is it gonna change? Let me go over here. Here we go. Let's see what one contract is on a mini. You know, just for shits and giggles. So you're risking 2,700 on the stop loss, and you're making 20,000 on that play.
Well,
I believe you need like a $25,000 account size in the futures in order to hold margin properly. You got to look into what the details are, but I looked at it once before months ago. And so
but
that's
do
why I
they?
was like, but also well, I don't know if they call them swap fees in futures, but holding from session to session, the fees are large.
Okay.
The fees are way larger in futures than they are in NASDAQ swaps. They're big fees, bro. You're gonna be paying that dollar. So you need a large account in order to hold something like that. Let's see what this was on the play today. Anyways, the play today was what, right here? One con. Let's say it was like right there. And then we did, that's about 200 ticks right there. That's about 200 ticks right there. If you would have held it to TP3, which was 3139, right around there. 4 bands, 1 contract.
Mm.
It's really nice. That's the minis. But see, you're holding that contract. You can't take partials here.
Yeah.
There ain't nothing to take partial. You're in 1 contract and you have to hold all that. I got it right around here. So I would have made like about 3,200. You know. What's 5 contracts? What's that? Shit, that's $10,000 risk. So on this play alone, if you've got the bag, it is 3139. If you've got the bag, bro, you would have made 20 bands right here. That's a $20,000 play. So you can understand the differences between the power in day trading and the power of a large account size.
Right.
In order to have the ability to risk 5,000, man, let me tell you something. I recommend you have 50,000 and up, 100,000. Now you don't need 100,000 because if you really know what you're doing, like I do, you can still risk this on like a $25,000 account. But you need to be set. You need to already have money in the bank. You need to be good. So you need to be balanced psychologically wise, you know, and in order to be able to be like, all right, I'm risking 5,000 on this play today because I want 20 bands in the account. When it comes to futures, this is where I'm going to end up at. I do this type of work right now on CFDs because I can control the risk. And the risk is I don't have to spend 5,000 in order to make 20. I can risk 2,500 and make that. The way that I trade on the CFD market. You get what I mean?
Bro.
But this is the type of things, these are the type of things that you should be playing around when you should be looking at the potential of every time you see a play. You should be like, damn, what would that have been on a mini? What would that have been with 5 contracts or 2 contracts? 2 minis. Let's say 2 minis. That's 8 bands. You don't need to trade the rest of the week. You just made 8 bands.
Right.
You get what I mean?
Mm-hmm.
But there's cats do this all the time. When they trade, they go in with $5,000 risk. That's what they're risking. And that's on the low end. You got guys that risk 10 and up on trades. What is 10? 10,000 would have made you 40,000. All in the same play that I sent you guys. That's the power of the setups that I give you. Just because you're making regular money right now does not mean you don't have the potential to start making real big bucks and life-changing money. $40,000 is life-changing money for some people.
Mm-hmm.
It'll definitely give you a good day, if not a good month. You know, this is how you start making 6-figure months, $1 million years. This is how you do it. And that's just these plays. You get what I'm saying? That's just these plays. So if you stick to the script, refine all of your rusty ends in the way that you trade, and just try to become as good of a trader as you possibly can, you can start doing things like this. You take these setups right here that I send you in the chat, and you're running $40,000 plays. Like it's nothing. You're running $20,000 plays on a regular day where $5,000 doesn't hurt you. You just made 20 racks in profit on top of your capital. So now you're feeling frisky. Now you're liking what you're seeing. You're in the zone. You woke up well rested and you're ready to go. Your psyche's in check. I'm telling you, you'll start doing plays just like this on a regular day trade that I send you. Anybody can do it. You just need to put the time in, and then you can rock out just like that. Because by next year, I'm gonna be doing this in day trades. That's all I'm gonna be doing. And this is gonna be normal to me. I'm gonna be running it up like this, setting my stop loss to 10,000 in profit. You get what I'm saying?
Mm-hmm.
And just letting the rest rock, knowing damn well I have 10 grand locked. I'm gonna go make some coffee, go chill out. You know what I'm saying? Shoot the shit with y'all in the chat while I'm racking it up. But it takes time to get there because you have to grow the account. You can't have a $5,000 account and risk 5,000.
Right.
You're running back, even though like there's a high win rate in the chat. I never recommend you going all in ever.
It'll be that one day.
It'll be that one, like today. Today, what happened? The play worked, but we took the L first.
Just imagine you would have put everything on that one.
Oh my God, you'd be
just to come back and hear everybody
bro.
won. That would have been.
And just to watch it go the way that it was supposed to go after you just blew your account. Oh,
it'd have been hot. Because old me, that would have happened. That would have happened.
You want to talk about pissed off, baby? Woo!
It is funny because I was like, yo, I'm not even forced it today. I said one contract. I make money. Look
at this. This guy's doing this. Nah, I don't think you can do 221 contracts. I mean, you probably could. 21. There you go. 25 cons. That's $100,000 play you're looking at right now that I just sent out this morning for the day. But in order to support a $25,000 risk, oh man, you know, you got to have that account balance up there. That's a 6-figure account balance. But there's wild boys that'll do that with a 50K account size. They really will. I'm one of those guys. I'm one of those guys that will, if I see the play that's working on as properly, all the ducks line up and I'm in that zone, I can risk half of my account size on a specific play. But guess what? I don't do it. I don't do it because I'd rather build the bag than sweat the bag out. Imagine I risk 27,000 and I'm like this, it's in drawdown and it takes me out. Oh, and then it goes my way.
Yeah.
That means I just lost 27,000. I got to put another 25 contracts on there. I'm going to be a little bit more wary putting another 25 contracts on there. Because now instead of 27, I'm at what? 54? No, 56? No, 54?
Yeah, 54.
Like, that's crazy. That's how you got to think about it, you know? So you have to moderate yourself. But the greed kicks in and one of these days you'll do some crazy shit and it'll work out. And then it will fool you to thinking you can keep doing that.
Yeah.
Either of you?
You know?
Really do want to walk though, are you guys? Yeah.
But that's it for today, guys. Like, that's how I wanted to go over. I wanted to go over the signal, why I saw what I saw, why I decided to go long, even though there was risk. There was the danger of the market tanking right to down here to the gap. We were still good. Why? Because market structure said this is what I should do. So the market told me what to do. I respected the market and I went for it. And we all went for it. So congratulations to everybody who did pull that trigger, because you still took that play. You're the one who took that. You're the one who pulled that trigger. Even though I set the play, you pulled that trigger. So you took that trade. That's your trade. You get what I'm saying?
Mm-hmm.
Always think about it like that. Like, yeah, you did that. Because you did. I don't pull your triggers. I just give you the education in order to prepare yourself to pull the trigger. And that's it, guys. That's it for the lesson of the day. Any questions? Anybody else got questions? I think we good. You got any questions, Tommy?
No, I'm good. I'm straightforward. Loved it.
Yeah. It's good. You get to see how everything ties together and why I trade the way that I trade.
Yeah, no. One thing I'm gonna incorporate now is going down to the lower time frames and seeing the details in the play. Because if I would have looked at it, I mean, I saw it rejecting, but I saw it rejecting off of a higher time frame. If I would have went down to the 5 minute and seen what was going on, I would have definitely jumped in it.
Yeah,
so
you go down there to collect data. If at any time the higher time frame isn't giving you enough data on the price action, the lowest you go down is the 5. You don't go any lower than that.
Okay.
You don't need all the information on the 1. You just don't need it. Not with this strategy, because this strategy is a higher time frame trading strategy. It's not a scalping strategy. It's a day trading strategy, capturing the movement of the day, not the movement for 15 minutes.
Right.
We're capturing a leg. We're waiting for the whales to come, and we're riding the wave with them. That's all we do. We follow the whales. Everything else is irrelevant in my book, because we capture the market moves. And you can see what the potential of exponential growth is when you trade like this. Like I just showed you with the different contract sizes and the different contracts with the minis. This same play here can make you $600, or it can make you 6,000, or it can make you 10 or 20,000. You know, it's just a matter of time when you get there. Excuse me. But that's it, guys. We can wrap it up right now. That was a good class. All right, my guys. Tomorrow we'll be on at the same time, 8 o'clock. I'm gonna figure out. Hopefully, we can get a setup. I've been waiting for setups to come while we're live, but they don't show up on Tokyo right now. they'll come, you know, but they'll show up when they want, whenever the market wants to print it. If they don't, if there's no setup, there's no trade. You know my rule.
Yep. I ain't knocking it.
You know. All right, so tomorrow,
All
you
right.
already know, New York session. We're on live again. We're looking
Yes,
for
sir.
another setup. Let's keep it clean. Let's keep it light, and apply proper risk.
Will do.
All right, bros.
All right.
Peace.
Yo, that trade is blasting off, my boy. Congrats.
You know it. All right, B.
All right, yo.